Welcome to a community update from the Department of Senior Affairs. I'm your host, Ed Nunez. Today's title of the show is The Myths of Reverse Mortgages, and with us to discuss that from Frost Mortgage is Dirk Gray. Dirk, thank you so much for being our guest.
You know what? I've been looking forward to this, Ed, since you suggested it.
Well, before we get into the myths of reverse mortgages, let's talk a little bit about the basics of a reverse. How do you qualify? And so the audience will know what we're talking about, because things have changed in the last couple of months. According, I've talked to you periodically. You know all these things about reverse mortgages, so I think it's important. With the tax breaks and tax cuts, people got a little bit more money in their pocket now, or allegedly, supposedly going to.
Yeah.
So I think it's important that we talk about it now.
Okay, well, basically what a reverse mortgage does is it gives you access to a percentage of equity in your house. So let's say that your house is worth $100,000 and we do a $50,000 reverse mortgage for you. With a regular loan, you're making a principal and interest payment. So over time, that regular loan, that $50,000 loan, gets smaller and smaller until you eventually pay it off. Well, with a reverse, it's just the reverse, because you've got the $50,000 loan and you're being charged interest and mortgage insurance, because it's an FHA HUD product, but you're not making a principal and interest payment. So over time, a reverse mortgage gets bigger and bigger and bigger. And that's basically the difference between the two. And a lot of people, they're in a position where maybe they're getting their Social Security, because you have to be 62 years or older to do it. It has to be your primary residence. But maybe they're struggling a little bit in retirement, and not having a principal and interest payment is very appealing to them. So that's why a lot of people do a reverse mortgage.
I think you mentioning not having principal and interest payment would be one of the huge advantages of a reverse mortgage. Briefly, before we get into the myths, and there's several of them here, can you tell me some other advantages to a reverse mortgage besides that? Because that's a big one.
Yeah,
that's a big one.
That's the biggest one. They want to get rid of that principal and interest payment. But some people, if they don't have a mortgage to pay off, typically about half the people that we see have an underlying first mortgage that has to be paid off through the reverse mortgage. So, today I had a couple come in. Their house was worth $160,000 or so. They had a $42,000 first. We have to pay off that $42,000 first with the reverse mortgage. But they still have a bunch of money available to them that they can take in the form of a lump sum, if they want to. They can take what's called a term payment, where you might say, Dirk, I want $800 over a 5-year period of time. So we'll do that calculation. Or they can get what's called tenure, where it's based on their life expectancy. Or they don't do anything, they don't pull out any money, they just leave it sitting in the house as equity, and there's guaranteed growth on similar to a line of credit.
Okay. I'll get to another question there, but let's get into the myths that you sent me via email. Myth number one being, you no longer own your own home. The bank or government does, and that would scare the heck out of a lot of people. And back in the 30s, all kinds of foreclosures during the Great Depression. But tell us what that means.
Okay, that's the single biggest question that we get. Probably 95% of the people that come in think that the bank is going to end up with their home, and that's just not true. Eventually, the bank, there's a non-recourse clause in a reverse mortgage. So if the reverse gets big enough that the value of the reverse is larger than the value of the home, there's no financial liability for the heirs. But the bank is not going to own your home. You're still entitled. You can sell it if you want to. So yeah, that's the biggest myth.
I want to ask you about that too, because during the crash of 2008, I believe it was, or 2009, the banks it seemed like they did own a lot of homes after that crash. So what's different now?
Well, I think, of course, the economy's come back.
A little bit strong, of course, a lot stronger now than it was then.
Right. But I mean, in terms of the reverse mortgages, a lot of people, and I think the industry did it to itself, when they began, they weren't good products. you had a bunch of private banks that were doing mortgages, and maybe you had the reverse for a couple of years and you and your spouse were killed in a car accident. The bank would step in and they would take the majority of your equity away. That kind of thing was going on. So, but over a period of time, HUD has greatly improved the product,
Okay.
and now it's a very sound financial product.
Okay, so we shouldn't see those kind of things that happened in 2009. It was quite a mess in several different areas, not just the housing area. So it's stronger now. They propped that up good. So okay, good.
Yep.
Okay, here's myth number 2 for our viewers: the home must be free and clear to qualify.
Okay, and that again is not true. Probably 50-60% of the people that come in, they come in with the intent of paying off their existing mortgage or some kind of other lien. Maybe they want to pay off a car, maybe they want to pay off credit cards. So with that money that they can take out of the reverse, if it's there and available, they can do that kind of thing. It doesn't have to be free and clear.
Okay. So you can. It says here too, automobile loans. Many senior homeowners can benefit from no longer having high monthly debt obligations, and automobile loans just one of them. So there seems like there's a lot of things that are advantageous to that. Because if you're thinking about getting a car, and my wife and I were thinking about down the line, I mean, $500 car payment a month can strangle you financially for 5 years.
You bet.
So I think that's important. The little thing you put there at the end there.
Well, you know something. If somebody can get rid of their debt obligations, they're going to sleep a lot better at night. And seniors are just like everybody else. I tend to see a lot of people that have a lot of debt. And fortunately, some of them have enough equity that we can help them pare that debt down. But because of the changes that you referred to earlier that occurred October 2nd, they reduced the amount of the principal limit, or what you know to be the loan amount, by about 20%. And that's hurt a lot of seniors. I don't know why they decided to do that. I mean, they made some other changes that I think were important, and we don't have time to get into them right now, but reducing the amount that seniors have access to, I think it was a real mistake.
That's interesting. That's interesting because, as you mentioned, there's some seniors, and we know this, that survive on Social Security primarily. They don't have a retirement. Then they got to make a choice between medication, which we know, medication costs a lot of money.
Yeah.
Food. Mm-hmm. So that's interesting that happened. I mean, there's been some things that have happened recently that have been good, but that's interesting. That's interesting because you want the seniors to keep as much money in their pocket as they possibly can, not everybody has a retirement.
No.
So
and they need the flexibility as much as possible.
The financial flexibility, no doubt about it. So interesting. Okay, so myth number 3: a good financial planner would advise against completing a reverse mortgage.
Okay, and that's an interesting one because I do a lot of work with financial service providers, and I think you know that.
Mm-hmm.
And early on, even within the last probably 5-8 years, the financial planning community, they were kind of, they looked at it and questioned whether it's something their client should do, which, I mean, I understood the questioning, but they had a bent that was a little over the top. Now they see it as a risk management tool that they can use in conjunction with the other retirement platforms that they have in place for the clients. So now they think it's a good option in most cases. It's not the appropriate option in every case.
What changed the thinking?
I think just HUD making changes over a period of time, and I think also the financial services people having a better understanding of it. They're getting this kind of thing is happening more and more, so they're getting exposed to the options that it can create for their clients. Like we can do something called a Social Security delay bridge, where Social Security, your full Social Security starts at 66, but maybe you want to retire at 62. But so you don't want to get into your Social Security, where you can do a reverse mortgage, withdraw the money out of the reverse mortgage tax-free, and then when you turn 66, then go into Social Security. So we do things like that.
That's really very interesting, I think. Yeah, I think one of the other things too is that when people have more confidence in government, and when 2008 or 9 the crash happened, it took a little while for consumer confidence, and it's coming back now. Think about how long it took. It did. Two of Obama's President Obama's terms started to come again under President Trump, but it took a while. And I think when consumer confidence isn't there, everything suffers. Housing, the whole market suffers. But it seems like now, especially with these reverse mortgages and the changes you mentioned that HUD has done, people are starting to feel a little bit more at ease.
Well, you know what, and just overall with the mortgage business in New Mexico, it wasn't that long ago that you could be doing one thing and be in the mortgage business the next day. There were virtually no regulations. So that coupled with not actually, they really didn't have an interest in educating or trying to do the right thing ethically. And so the people in the public, they're not dumb. They know when people are trying to take advantage of them, and the reverse was part of that as well. So it's just gotten a lot better.
I think the information put out has gotten better as well. There's been crashes before, 29, the 85 SNL savings and loan debacle. This recent crash might have been as close to a depression, they said. Think about the actions President Bush had to do. I mean, that was unprecedented, really.
Yeah, it was a big deal.
Yeah, it really was. And I don't know that, I didn't lose much. I still had food on the table, but it was close to it being a major depression. So I think, both parties deserve credit for, although some people would say, the buyouts, the people are still upset about that. But things have moved on, and in a capitalistic economy that's driven by capitalism, you got to move on, right? I mean, people are going to not wait and where can I get mine? Can you get yours?
Yeah.
That's the way it is. Dirk, great job at explaining that. I hope you don't mind me asking these additional questions.
No, not
it's
at
an
all.
Interesting topic to me.
Glad to be here, Ed.
Okay, so myth 4: the closing costs of a reverse mortgage are very high. Now, people are definitely going to want to know about this.
Okay, HUD again has made changes in that regard. Now the only things that you're out of pocket are the appraisal, which is a third-party cost. The appraiser does their job. They need to be paid, regardless of whether you think it's a good outcome as a borrower or we as a lender think it's a good outcome. They need to be paid for their work. And then the HUD counseling, the third-party counseling that's done, again, they've done their work, so they need to be paid. The appraisal is around $570 or so. Plus or minus, and the HUD counseling fee is about $125, $150. The biggest expense with a reverse mortgage is the upfront mortgage insurance, the FHA mortgage insurance. Now it's 2% of the value of the home. So that's a sizable amount. So you want to make sure in most cases that the reverse mortgage is long-term. It's not meant to be a short-term instrument like 2 or 3 years because they can't recoup their closing costs. So that's why the thought is they're high.
Okay, all right. And then those costs, and I'm glad you mentioned it. The appraiser, $525. The HUD, $125. They have to be paid. That doesn't seem to be unreasonable.
And the rest of them are financed into the loan. They're just taken out of the reverse mortgage at closing.
So no undisclosed costs that
No.
we're going to come up later and you didn't
No.
read the fine print and nothing like that.
Nothing like
That's
that.
important to know too.
It
That's
is.
important because
You're right.
when you're itemizing and you're you're expecting something and then something later comes up unexpected, that could really hurt a person, especially when we're dealing with seniors here.
Right.
Seniors, as we mentioned, sometimes are on a limited income. Myth number 5. This makes me laugh when I read it. You no longer need to pay property taxes.
Well, yeah, and you're not making a principal and interest payment if you choose not to. If a client wants to make a payment and keep the reverse small or at its original size, they can do that. But a lot of times they'll think, well, I don't have to make any kind of payment. But like any other home, you have to pay your property taxes or the county is going to foreclose on you. So property taxes, your homeowner's insurance, and maintenance on the house, they still have to continue to do that even if they're not making a principal and interest payment.
I mean, the other thing is, when would you never not have to pay property taxes? When you
Right.
death, right? I mean, when you die.
Yeah.
And I was thinking about the Beatles, The Tax Man. I just heard that song the other day. Uncle Sam.
I haven't heard that in a long
No,
time.
it kind of
Yeah.
reminded me of that when
Yeah.
I heard that song. Uncle Sam is going to get his taxes. That's the government's going to get their taxes, and you must pay your. That's part of it. That way, people don't think, oh, we're out of. We don't have to do that.
Right.
That's something that, heck, in worst cases, you can go to jail. If the worst case. So that's important that people still know that. Got a couple myths here left here, Dirk, and then we'll kind of wrap up all the myths that you sent to me via email. So myth number 6: if your home is in a trust, you must remove it from the trust to qualify.
Okay, and that's not true. If you have a revocable living trust, we don't need to remove the home from the trust. And all a revocable living trust means is, revocable just means you can change it, and living means that you can do it during your lifetime. So you can leave your home in a revocable trust, and we can do the reverse mortgage. But occasionally, I'll run across somebody that'll come and say, I'm being asked, I want to do a reverse, but I'm being asked to take the house out of the trust. That's not true. Don't have to.
Okay, how often does that happen? Because I'm sure, again, some of these things, now you explain it very, very well. You're an expert on this, working at Frost Mortgage. You've done this for a while. How complicated are these explanations to some people? I mean, I'm sure people, how often does that happen about the revocable living trust? Are these done on a frequent basis?
You know what, Ed? Not very often. Most people don't have their house in a trust.
Okay, I didn't think so, yeah.
But occasionally it does come up. And we'll have that conversation as just kind of that educational process that we go through initially. What we do is, just kind of as a matter of course, we'll sit down, or I'll sit down with somebody for an hour, hour and a half, and we'll just talk about reverse mortgages, how they work, go through all the costs. I'll develop what are called comparisons, different types of reverses, and have them look things over and make a decision about what's best for them. At that appointment, even if they want to originate the loan, we won't let them because we want them to go home with some of the HUD material and talk to each other or talk to a friend that they've got some confidence in and make sure that it's what they want to do. And then we'll have them come back in and do an application if they want to do it.
Okay, so it's no pressure tactics there. You want to make sure it's a big decision. You want to make sure that everyone's comfortable, and
Right.
You're not calling on the hotline 24/7 and
Right.
pretty much letting them make that decision themselves, which is what they should do. Myth number 7: reverse mortgages only work if you already own a home.
Okay, and that's not true either. The majority of people that do a reverse will do a reverse like we've already discussed. They'll do a reverse mortgage, pull some money out of the reverse. It's like a refinance because they're paying off their existing mortgage if they have one. But you can also do a reverse for purchase. And what's cool about the reverse for purchases is basically you double your borrowing power. So let's say that you sell a home for $150,000 and you don't want a principal and interest payment. Well, you could take the $150,000 and go buy a $150,000 house and not have a payment. But with a reverse, you can put $150 down, and then we're going to loan you approximately $150, so you can buy it $300,000 rather than $150. But the reverse for purchase, it's not well known, and again, it's the education, that process that more people need to hear about it. So
I should say so. Yeah, that's something that I'm sure would pique some people's interest.
Well, the builders like it because they're selling more house, and because the borrowers, they're putting about 60% into the deal, so to speak, and so they'll tend to buy a little bit higher end upgrades because they can afford to. So it's a win-win. It's a great product for, again, the right people.
Just to ask you this, I mean, the housing market here in Albuquerque and in New Mexico is pretty good, right? I mean, I know for a while everybody took a hit, as far as being flat, but growth seems to be pretty. And one thing about New Mexico, last ones to feel the effects of a recession, and kind of the last ones to come out of it too.
Exactly.
So I don't.
That's true.
And one of the things that Governor Martinez said in the paper that she felt yesterday that the state was pretty good. But again, that New Mexico is always the last one to come out. Mm-hmm. But as far as the housing market now,
I think we're on definitely on the rebound. I think things are looking better, and the builders are more excited than they have been in a while. More people are purchasing, I think, statewide. So I think it's all good, Ed.
Got to be good for construction, housing, a number of different economic indicators in the state. It's got to be good.
Yeah, no doubt about it.
Okay, last one, Dirk, and then we'll go back and wrap up the whole thing.
Okay.
Myth number 8, Social Security and Medicare benefits will be affected by reverse mortgage. And gosh, my heart stopped almost when I heard that, because gosh, Social Security and Medicare means so much to so many.
Right.
So explain that one, Dirk.
Okay. Well, first of all, the money that you withdraw from a reverse mortgage is not taxable. That's important. And secondly, it does not affect Social Security, and it does not affect Medicare. If you are using Medicaid, they need to check with the person that works with them in that regard to make sure that that the Medicaid will continue without interruption. That's something they need to check on.
Okay, that's really important, because it won't be affected, though. It does not affect Social Security or Medicare.
Right.
And as we age, and I'm headed towards that too. We all are in some way, shape, form, or another. We all are. So yeah, because the people with Medicaid and Social Security. I mean, if you think about how long Social Security's been around, since President Franklin Roosevelt, and there's talks about restructuring. President Bush had different ideas, and you wonder when there is going to be change, because you don't know if it can sustain the same level it is right now.
Well, something, for me, it kind of crept up on me, so to speak. But I'm beginning to think about those things a lot more than I ever have. How are we going to navigate the whole retirement equation? What do I have to do now to prepare for when, Lois and I are going to be, making that decision? And we didn't always make the best decisions. So we're paying for that to a certain extent. But because I do what I do, every day I'm sitting down talking to people, and I'm seeing their situation and how they're navigating it. And so it's always kind of top of mind for me.
Yeah, and it's funny, because I'm 55 now, and those decisions aren't that far away either. I mean, it was 5 years ago, not thinking about it at all, but now at 55, I'm close to retiring from the city. So you have to start thinking about those things, because at one time or another they'll affect us all.
Oh yeah.
And things change. Government changes, parties change, plans change. And sometimes it can't benefit everybody. There's no way. There's just no way. It might work for some, it doesn't work for others. It's a lot of education, a lot of different. The myths of reverse mortgages. Thanks so much for being our guest. We sure appreciate it.
Oh, you know what, Ed? Thank you for having me.
You bet. We'll get you on again real soon.
Okay. Thank you.
For the Department of Senior Affairs, I'm Ed Nunez.